solved problems. And the one is financial products for young people, where you don't necessarily require collateral and where someone's financial background doesn't play a role. As an organization and as a founder, I believe that you need to stay as close to impact as possible. That's why our headquarters are based in Rwanda, because most of the students that we finance are based in Rwanda. So it's natural for us to want to base our fund in Rwanda.
One of the advantages investing through KIFC has is having those DTAs with fellow African countries helps to ease business entry from Rwanda to the rest of Africa. And having a young team of professionals whose single focus is to help you set up your business. It's been one of the most beautiful experiences I've had worldwide doing business.
One of the critical factors here is having a credible framework that the market will accept. We mean the right laws, we mean the right regulations, we mean the right approach to compliance, and Rwanda at great speed are passing these laws, and that's very encouraging to see.
When it comes to Africa is a growing The mandate of the Minister of Finance and Economic Planning is to manage the national economy and to ensure macroeconomic stability and economic development. The Kigali International Financial Center plays and will play a great role in our Vision 2050.
Kigali International Financial Center has been created to promote Kigali as a platform for financial innovation and financial investment in Rwanda, but also across Africa. And it has had a very good start and been able to attract a number of noticeable players already, and is continuing to do so.
The Kigali International Financial Center is coming within a context of rapid economic growth in Rwanda. Today, if you want to do business across the continent, we offer you Rwanda as a hub. You come here, you set up your business here, and then you can expand to the rest of the African continent.
In terms of untapped opportunities in Africa, we have access to expand. Yeah, we have a very large untapped market, can be catalyzed by technology today. Africa has the highest mobile penetration. That is in itself a really good opportunity to transmit those financial services.
We are in the middle of the digital transformation. We have new ways how to interact with finance, with our fingertips on our smartphones. In the financial industry, we call it fintech, financial transformation. This kind of trends, we have a big impact in the future.
Fintech is a key component of what we want to do in Rwanda, and that will have positive externalities for Rwanda, but also for Africa.
There are certain areas that require our attention in society where we haven't solved problems. And the one is financial products for young people, where you don't necessarily require collateral and where someone's financial background doesn't play a role. As an organization and as a founder, I believe that you need to stay as close to impact as possible. That's why our headquarters are based in Rwanda, because most of the students that we finance are based in Rwanda. So it's natural for us to want to base our fund in Rwanda.
One of the advantages investing through KIFC has is having those DTAs with fellow African countries helps to ease business entry from Rwanda to the rest of Africa. And having a young team of professionals whose single focus is to help you set up your business. It's been one of the most beautiful experiences I've had worldwide doing business.
One of the critical factors here is having a credible framework that the market will accept. We mean the right laws, we mean the right regulations, we mean the right approach to compliance, and Rwanda at great speed are passing these laws, and that's very encouraging to see.
When it comes to Africa is a growing market. Now recently 55 countries of Africa has decided to embark on the continental free trade area, which is the largest globally. And this makes even more attractive Africa as a destination for investment.
This is a game changer for the continent for a number of reasons. First, there will be increased focus in the trading of value-added products and services. There will be the benefit of comparative advantage as well between countries. There will also be the benefit coming from the fact that intra-African trade transactions will be settled in local African currencies.
The financial sector plays a key role in the functioning and the development of any economy. That is the place where people who are innovators and entrepreneurs and who need capital meet the providers of capital. And there can be no economic growth, no successful businesses if that connection is not done effectively and efficiently.
Financial innovation is key to unlocking sort of our economic growth on the continent. And the fact that Rwanda is leading that is again showing how it's being sort of a beacon of light around our financial innovation. Making Rwanda a financial center will have a significant impact for the region.
This is Africa's turn. It's happening, and the financial services is at the heart of that. It's the lifeblood, it's the heart, it's the lungs. I mean, any metaphor, analogy you can take, financial services is indispensable to finally lift Africans out of poverty, provide them with the jobs they need and the prosperity they need.
Good morning, everyone, and welcome to today's webinar, Fired Up for Finance Part 4, covering the new law on collective investment schemes. My name is Liz Arakaza. I'm a business development manager at Rwanda Finance, and I'll be your moderator today. The law we're discussing today on collective investment schemes is part of the legal reforms that are spearheaded by the Kigali International Financial Center with an aim to position Rwanda as the next investment hub for the continent, an investment hub that offers a sound legal framework that's up to international standards. Now, to discuss this law, we have with us today policymakers, professionals from the financial ecosystem and the private sector to share their insights and key points brought about by this new law on collective investment schemes. To our audience, thank you so much for joining us today. We hope you walk away understanding the key points of this new law and its ins and outs. And we really want this to be an interactive webinar. So we have our chat box open. You can share your questions, share your comments, or just share your insights in the chat box. It's open. To give us insights on this topic, we have some wonderful, distinguished guests with us today. On my right is Mr. Jonathan Gatera, who's the Chief Executive Officer of Rwanda National Investment Trust, RNIT. For those of you who don't know, RNIT is an investment management company established by the government of Rwanda to promote the culture of savings. Prior to this position, Jonathan was the Director General of Rwanda Social Security Board, RSSB, and before that, he was on the executive management team of the Central Bank of Rwanda. He has also served on numerous boards, including Bank of Kigali, Simerwa, and Inyange and Industries, among others. Now, Jonathan brings today a unique experience to this panel, being the CEO of the first ever unit trust scheme established in Rwanda. Jonathan, welcome. We're pleased to have you with us.
Thank you.
Thank you so much. Next up, we have Noela from Capital Markets Authority, which is really the regulatory body of collective investment schemes. Noela is currently the Supervision and Inspection Manager. She joined the Rwanda securities industry in its upbringing in 2010 and has gained wide regulatory experience in capital markets. In her current capacity, she's responsible for oversight function, including licensing of market intermediaries. She's also involved in approvals of capital market transactions, investigations, and enforcement. Noela, welcome to this panel. We're pleased to have you with us.
Thank
Next up, we have Dieudonné Nzafashkwanayo. Dieudonné is a senior associate at ENS Africa, one of the largest law firms in Africa. And he's in the Rwanda corporate and tax practice. He has a wealth of experience in various commercial areas of law and tax. Dieudonné is consistently ranked among the best lawyers in the Rwandan market by Chambers and Partners, and regularly features in international and local newspapers on tax, corporate law, banking, and employment law matters. So we're really in good hands here. Dieudonné, thank you for joining us. Welcome to this panel.
Pleasure.
Last but not least, we have our very own Dr. Adelit Nsabimana. Dr. Adelit Nsabimana has 14 years of experience in banking, public finance management, and strategic consulting. He's currently the technical advisor to the Rwanda Finance Limited team, where he advises on policy orientation for the development of the Kigali International Financial Center. So he's actually a part of the team that's been spearheading the legal reforms that you see in our financial sector, and that involves the topic of today, the collective investment scheme. Dr. Adelit, welcome to this panel. Very pleased to have you with us.
Thank you.
Without further ado, I'm just going to jump in. My first question goes to you, Dr. Adelit. The topic of today, the CIS law. The CIS law is not a new law in Rwanda. We had the CIS law that was enacted in 2011, but it's since then been reviewed and repealed to give us the new law, the new CIS law that we have now. Help us understand why has that law been reviewed and repealed? What are some of the changes, and how is that in line with KIFC?
Yeah, thank you, Liz, for the question. So to take a step back, for the vision of Rwanda to be a high-income country in 2050 and a middle-income country in 2030, the government of Rwanda, among key initiatives, was to put in place to establish Kigali International Financial Center. In December 2017, so the government of Rwanda took a decision to establish that center. So through the Minister of Finance and Economic Planning, the government of Rwanda commissioned a study to inform the way forward, how to implement that government decision. So the study identified 3 key pillars. Number 1 was to put in place a conducive legal and regulatory framework. Number 2, to put in place an attractive tax policy. Number 3 was skills enhancement and talent development. So now we are under that pillar 1, to put in place a conducive legal and regulatory framework. So that study identified a number of laws to be reviewed to make sure we have a law which is attractive, where Rwanda will offer under that legal instrument, similar to other financial centers are offering. So there we identified gaps, so we discussed with different stakeholders, including Capital Market Authority, RDB, Law Reform Commission, BNR, so Private Sector Federation, so to agree on what we should amend for that law, benchmarking, as I said, to what other international financial centers are offering. So from there, the law passed to the cabinet approval, then to the parliament for enactment. So that was the journey we have done to come up with this legal instrument we are discussing today. Thank you.
Thank you so much, Adelit. We commend you for the work that's being done by the team spearheading these legal reforms. But I'd like to dig a bit deeper. What are some of the changes that you've made to make sure that this law is now up to international standards?
Yeah, thank you, Liz, for the question. As we know, Rwanda is aiming to be a full member, for instance, of OECD Global Forum for Exchange of Information on Tax Matters. Also, the Capital Market Authority to be a full member of IOSCO. So IOSCO is International Organization of Security Commission. So if I take just those 2 bodies, they come and look at legal instrument you have. So they come up with recommendation. So then, for instance, those recommendations from IOSCO and from OECD are now in the current law, which was not, which were not in the law we had in 2011, for instance. Also, as I said, to make Rwanda will be offering the same as other financial centers are offering. So we put other type of schemes which were not there before. Just two examples, the partnership scheme was not there before. Also the investment company scheme, which you have now in this current law.
Okay, that's great to hear that the law that we now have in place is up to international standards and respect international standards of OECD and
IOSCO.
IOSCO, there you go. Now you've mentioned some of the types of collective investment schemes. You've mentioned partnership, you've mentioned the investment company that are new additions to the collective investment scheme law. Can you give us all the options that somebody can use, an investor can use under the current CIS law?
Yeah, thank you, Liz. So we have in this law, we have four types of schemes. So those four types of schemes actually are put in place having different legal structures. So number one is unit trust scheme. So is established by a trust deed signed by between the trustee and the investment manager or the operator, so the one who initiates the fund. So that is legal structure, number one you have. Number two, as I said, you have investment company scheme. So that is established as a normal company, so we have the articles of association or a memorandum of understanding as a company. So signed by all shareholders or people who will join the scheme. So that is number two. Number three, we have the partnership scheme. So the partnership scheme, the legal instrument which established that scheme is what we call partnership agreement. So it's an agreement between partners. So this one, we have the general partner, so will be actually the one who will manage the scheme. Also limited partners who will just join the scheme for the purpose of putting money and expect a return for the investment they have done the scheme. Number four is what we call the contractual scheme. Is established by an agreement signed by between the trustee and also the operator or investment manager. So those four types we have now in this current legal instrument.
That's great. Thank you so much, Adelit. From what I hear, we have the, under the CIS law, we have the partnership option, we have the contractual scheme option, we have the investment company option, and then we have the unit trust scheme option. Thank you so much, Adelit. I'd like to pivot to Noela. As a person that works for the regulating body of collective investment schemes, what exactly are the powers, regulatory powers of CMA as it relates to collective investment schemes?
Yeah, thank you, Liz. I'll summarize our powers in three categories. We have, first of all, we have standard setting powers. This goes with putting in place standards and the regulations governing operations, functioning, and organizations of these CISs. And also, of course, putting in place licensing requirements, because we need to have some entry requirements when you are you are setting up a collective investment scheme. We also have under the regulations, we put in place regulations governing the conduct, because it's a regulated market. So the conduct also and other principles that could be used by market intermediaries and also these collective investment schemes to have a fair and transparent market, because that is our goal. The second category of powers are powers related to supervision. Under these categories, we have the powers to inspect. We can enter premises of investment manager or the operator or all other schemes, collective investment scheme service providers, including custodians or other type of service providers. And we have also powers to investigate. So we have investigation powers, but I need just here to make the difference. Our investigation powers relate only to collection of data and information relating to any violation. So it has to be understood that these investigation powers are totally different from the criminal investigation that are done by other competent authorities. We have also other oversight powers that goes with requesting information. That is key, and this is about compliance with the regulatory framework. So the third category, this is about the enforcement powers. The enforcement powers, these relate to sanctions or other enforcement powers that we might need when we need to take action against any breach or any non-compliance over the CIS or other service providers. Thank you.
Thank you so much, Noella. Dieudonné, I'll pivot to you. Adelit has mentioned the different types of collective investment scheme options or forms that people can use, that people have access to now. Would like to understand how the taxation aspect of those different collective investment scheme options. Can you shed light on that?
Thank you very much, Liz, for that question. So basically, there are three main aspects of as far as taxation of collective investment scheme is concerned. So the first one is the taxation of income received by collective investment scheme. The second one is taxation of income received by investors in a collective investment scheme. And the third one is about taxation of gain realized by investors when they divest or when they dispose of their investment in a collective investment scheme. So now, starting with the first one, we also need to understand the type of income that are generally received by collective investment scheme. So in principle, these are mainly one, the dividends, if they are investing in equity securities. Second one is interest, if they are investing in fixed income securities. And the third one is capital gains in case the fund retires and their investment is disposed of, or maybe those that are specializing in holding securities and sell them to maximize the return on the investment of their investors. So for that specific one, so there are two possibilities. So those types of income may either be taxed as what we call passive income or investment income, or as business profits. So when I say they may be taxed as passive income, that means that they may be subject to withholding tax at source, where I would be talking of 15% withholding tax in the case of dividend, or 5% for the case of CGT. But now let us then bring it in the context of collective investment scheme. So where, for instance, a CIS is holding shares in a given company and that company distributes dividend. So that dividend, it will depend on whether it is a listed, it is in relation to a listed share or not. If the shares are listed, for instance, with the Rwanda Stock Exchange, the withholding tax may be 5%, because we have that special treatment under the income tax law. So if it's not listed, then it's standard, 15%. So now, for the case of capital gains tax, so the capital gains tax is 5%, but still if the shares are listed, then there is full exemption. Now, this is going then to be what would inform the fund manager in structuring the CIS, so now, and choosing how they should be taxed. So when you talk of taxation as business profit, which is also another option, so that means that the fund would receive the income, put it in, account for it, deduct its expenses, including fund management fees, and other fees paid to other service providers and then pay corporate income tax on the net profits. So now, by paying corporate income tax on the net profits, that would mean that ideally the rate should be 30%, but now with, of course, this, the whole spirit of KIFC promoting collective investment schemes, so the investment code provides for incentives. So, and subject to the requirement of the investment code, so collective investment scheme may benefit from a preferential CIT rate of 3%. So now, to conclude on that, so I would say that much as yes, a CIS would have to make, to consider all the relevant factors to choose whether it can be, taxed, its income can be taxed as passive income or as business profits. The best way is to opt for like the taxation as business profits, because CIS are different from other passive investors who are not incurring any expense in relation to holding their investment. Because the CIS itself is now paying fund managers, it's paying custodians, it's paying other service providers. So those expenses need to be, deducted. So that's why the taxation as business profit should be the right approach to be opted for by a CIS. Now, but that's mainly when a CIS is structured as a company, so the investment company, as Adelaide mentioned. So now, for the other last two types of collective investment scheme, which are mainly unit trust scheme and contractual scheme. So these ones are not, they are not legal entities as such, so they are based on the trust deed or the contract between the operator and the depository. So, and technically, they are holding investment on the account or trust of the actual investors. And their taxation should be subject to what we call flow-through, whereby the income they receive should flow through directly to the investors. Now, if it is to be understood in that perspective, then that will mean that once a CIS structured as either a unit trust or a contractual scheme, so that income would be deemed to be accruing directly to the investors, not the CIS itself. And the consequence would be that that income would not be taxed, because in terms of the income tax, income received by Income Tax Act, income received by investors or holders of unit or shares in a CIS is exempted from income tax. So now, the third one, which is more interesting, then is the partnership. Because as we speak now, the law we have treats a partnership in the same way as a company. So that means that it's subject to corporate income tax. So, and that means that, at least as of now, so whatever I said in relation to investment income should be applying to a partnership. But things may change quite soon. So because we have a bill amending the income tax law being discussed now in the Parliament, and one of the changes that are being introduced is that partnership, whether it's structured as an LLP, limited liability partnership, or general partnership, of course for CIS, the only option available, structure available, is a limited partnership. They are going to be tax transparent. Tax transparent in the sense that they won't be liable for tax as themselves, but instead the tax liability is at the level of partners. So that means that the profits or income received by partnership from the investment they hold in various, investee companies is going to be taxable at the level of the partners who are the actual investors or holders of participatory interest, and the consequence would be the same for unit trust and the other structure of contractual trust, because under the investment code, under the income tax law, the profits or income received by investors from CIS is exempt from tax. So it's clear that there are going to be, legitimate tax planning opportunities based on these structures and whatever, treatment you are going to have in the income tax law. Now, the last one, maybe without taking much of your time. So when it comes to the taxation at the time of disposal of investors' holdings in various schemes. So for that one, there is a full exemption. So the income tax law provides that the gains arising from the disposal of units, shares, or participatory interest in collective investment scheme are exempt from capital gains tax. That's basically how I can describe the taxation aspect of CIS. Thank you.
Thank you so much, Dieudonné, for that very thorough answers. But I want our viewers to retain a few key a few key points per
Yes.
se. Let's
Yes.
say you said there's a new income tax law that's
Yes.
about to be approved, that's in the pipeline. Let's assume that that is in place.
Yes.
What would I expect to pay at the level of CIT? What would I expect to pay at the level of withholding tax and at the level of capital gains tax?
Well,
in summary.
for CGT, when an investor in a CIS disposes of his interest, there won't be any tax. So
Exemption.
that's what should be starting, full exemption. So now when it comes to dividends, an investor in a CIS may receive from an investment company which holds shares. This one is also going to be fully exempted. So now, now what is more of an issue is how actually the income, when received by a CIS itself, should be taxed. So, and this is going heavily to depend on the structure that is adopted by the fund manager, who is technically the one setting up the fund or the scheme. So if it's structured as a limited partnership and with the flow through option, or not even an option, the flow through arrangement we have under the amendment to the income tax law. So that means that the income will be deemed to be accruing directly to the partners. And in terms of the income tax law, income received by investors in collective investment scheme is tax exempt. So I can see the partnership being the most preferred structure for CIS in the future. For unit trust and contractual scheme, much as one looking at how they are structured would believe that they should also be subject to the flow-through arrangement. So maybe that would require more clarity in the law. I mean, because when you look at the law you have today, even the amendment, there is nothing dealing specifically with unit trust and contractual schemes. So, but in any case, at least the structure suggests that they should all be subject to the same regime as limited partnership. Thank you.
Thank you so much, Dieudonné. What I'm hearing from that is exemption on capital gains tax, exemptions on withholding tax, and that's from the income law that's going to be approved very soon, and some options of tax transparent collective investment schemes. Right. So we have a very competitive collective investment scheme that's competitive. So thank you so much, Dieudonné.
Pleasure.
Jonathan, I'd like to speak. I would like to to hear from you a bit as the CEO of Rwanda National Investment Trust. There we go. What has that experience? What's your experience with RNITE, and do you think that the mandate of RNITE is promoting fund structuring or domiciliation in Rwanda? And if you think that it's promoting fund domiciliation or structuring, how so?
Right. First of all, I would like to commend the work done by KFC and the stakeholders come up with this new law, because the old law actually, where we came up as a Rwanda National Investment Trust, it was within the framework of the old law, and actually we would face different challenges in terms of compliance, but also there are some other gaps which were there. And as you know, as my colleague Adelite mentioned, the government of Rwanda wants to reach in our vision. So we could have challenges in terms of attracting especially other investors from diaspora, from other jurisdictions. So I really appreciate the work that has been done. At least now most of the questions we had have now been answered in this new law. Now, come back to your question. In your introductory remarks, you mentioned Rwanda National Investment Trust is an investment management company which was established by the government of Rwanda. It is actually the fund manager of the first unit trust which was established here, yes, which is called Iterambere Fund. And it was launched in 2016. Now, Rwanda National Investment Trust, the key mandate was to mobilize or to get out and preach the gospel of self-reliance in terms of having savings with domestic savings, which would entirely help not only the savers but also the country to reach the goal of higher income country by 2050. When it was established, we had to, of course, to do a lot of road work in terms of literacy campaign, why should we save? But again, after doing that, you show people how to save. That's where the first unit trust, Iterambere Fund, came up. And so it was mainly to help people with low income, because the minimum investment was 2,000, and a unit by that time was 100 francs, meaning that at least the first saver would come up with 20 units into the fund. And so we'll do the going out, collecting funds, and then we do the investment. Of course, it was a bit challenging when it was starting. I must be sincere. But where we are today, things are going well. Now, maybe this may not be the platform where to air out the night, but maybe I just
feel free.
All right. So it is actually the best, if I may say, people who can, both not only in Rwanda, the Rwandans, but even diaspora, even people, non-Rwandans who are living here, even those outside. So the collection is done, and then the investment is done by Rwanda National Investment Trust Limited. We have here, it needs to be clear, we have a fund manager called Aranite, and then we have a unit trust called Aranite Iterambere Fund. Okay, so Aranite Iterambere Fund is the unit trust. Now, the company does the management. I think my colleague here has mentioned something which are very clear. And then what we do as a government company, it was initiative of the government, at least to make sure that even other private people can come up. And this has yielded up a good result, because we have seen some few other private companies coming up. Now, the first unit trust, Aranite Iterambere Fund, we do the collection, we do the investment, and then the return on investment is totally for the unit holders. And as we speak today, it is tax exempted, as I mentioned. And so everything that is being done, what we get from the savings we have made, or the investment we have made, is channeled to the unity holders. And it is open-ended fund. It's a growth fund. So it is a free exit, free entry, free exit. So you come in anytime you want. When you want to exit, you can get out with all what you have accumulated, both your investment plus the accrued interest. So it is very easy to get in and easy to get out. And currently, the return on investment is very attractive. So I think even our viewers need to know this, and which we really appreciate for both the initiative of the government, but also the KFC. What we are doing now will help us to move a more forward step in terms of even attracting more investment into our country.
Okay, that's great to hear. Thank you for sharing your experience with Aranite and Aranite Iterambere Fund. It's great to hear that, as a first mover, you've been able to encourage other unit trusts to set up, and that the law that is now in place actually makes it a bit more attractive to set up a scheme like a unit trust scheme. Sure. I'm interested to hear what Aranite invests in. Is it like equity securities? Is it fixed income securities? Do you invest in private equity?
Yes.
Where do you invest?
Yeah, the investment policy guideline allows us to invest in all possible portfolio. I mean, the asset on the market. But currently, we are mainly investing in fixed income. Simply because fixed income, at least it was in order to make sure that unit holders are comfortable. Because when you invest in it, we are not investing in these other risky areas, simply because we are trying to kind of motivate people to save. You know, when you go into other assets like real estate, like equity, you may really find that the market is not all that very attractive. Okay, currently, but our over 97% of our portfolio is in fixed income currently. But we are we shall be going to other assets in the near future.
So safe investments with a good return.
Sure.
Great.
Yeah.
Adelit, I just want you to clear up something for us and our viewers. What are the eligible investments for a collective investment scheme? Can I, for example, invest in derivatives, commodities? What's the scope?
Yeah, thank you, Liz. For viewers actually to understand this and to know what we have now in this new legal instrument. So we have, if I may call it, two separate assets to invest in. So we have now, depending on how the CIS has raised money. So if the CIS has raised money from the public, is what Mr. Jonathan said. For instance, an open-ended scheme. So it means the investor may come and ask the scheme to redeem his participation in the scheme anytime, as he said, free exit, free entry. So the law we have now will not allow that such scheme, for instance, to invest in asset where we call the capital to be patient. For instance, take years to have a return. So we have schemes which raise money from the public and schemes which actually are not raising money from the public. For instance, the partnership scheme. So those schemes can invest in those, for instance, derivatives, real estate, commodities, private equity. So because they have not raised money from the public, so the investors there, they are patient actually to wait years for the scheme to make a return and actually pay them dividend or whatever interest, depending on the legal structure of the scheme. So the category one, as I say, two categories, is where now we, as Jonathan said, the scheme invests in less risky securities. For instance, government securities, municipalities, fixed deposit, financial institution, money market instrument. So those are the two categories you have in this law. So in some jurisdiction, they have a separate instrument. So what they call alternative investment fund. So the fund which has not raised money from the public to invest in those assets, which they're really patient for the investment to make a return, and also the scheme which they have retail and which expects a return and a free exit, free entry anytime, so they invest in less risky securities. So those are the two categories you have now in the one legal instrument for the current in the current law we have.
Thank you for shedding light on that, Adelit. Noelia, I'd love to understand from the regulator perspective. He just explained that there's schemes that are retail schemes, there's schemes that are more on the private, where you raise funds from private investors, complicated investors that understand what they're doing. Do they all need to be licensed? Do they all need to go through CMA, and why?
First of all CIS to be set up, they need to get licensed from the capital market. In the previous law, only public collective investment schemes were concerned. But at this time, all collective investment schemes set up need to get, first of all, a license from the regulator. Why? This is because from our regulators' perspective, we have the mandate to protect investors. Mm-hmm. And also, we have also the mandate to promote a fair, orderly, and transparent market. So by this, for anyone that purports to provide investment management license, these are operators of the collective investment schemes, mm-hmm. that person needs to be known because of the regulated activities the person is involved in. And also, apart from that, the CIS itself, we need to know them. Who are the investors that are in there? So the approach will be different because this is a business decision that is taken by the operator itself. Who are the targeted clientele that they are looking at? Mm-hmm. Are they sophisticated? Are they capital risk investments? For example, as Jonathan said, like the Iterambere Fund is a public collective investment scheme. It's a collective investment scheme that whose investors are even from low-income earners to, there are no limits to the earnings they might have. You feel that like those ones need more protection than others because they go and put their investment into the hands of the fund manager or the investment manager, which is our night. But you'll find other cases whereby a collective investment scheme is set up with the view of investing money laundering and terrorist financing. We have obligations vis-a-vis those organizations. OECD, same thing, or even IOSCO. Activities that are regulated need regulated activities. We need to know what kind of product and service they provide. Mm-hmm. So if we are to answer to those international standards, we need to know what they require. We need to know them. Mm-hmm. And this we need to know requirements and obligations that those CIS have vis-a-vis those international organizations and through the regulatory body. That's why all CIS these days need to get the license, appropriate license before setting up.
Thank you so much, Noella. That's very clear. Now, you've mentioned that some CIS might have the option to be exempted if it's more, I guess, like just for transparency concerns for the regulator, but some also need to be fully licensed. What's the process like? What's the differentiation? Who can request an exemption and who has to get a license?
Well, this new law has a list of those who can qualify for exemptions, for example. For instance, if these are if their offer is limited, mm-hmm. let's say, for example, to sophisticated investors. And when we talk about sophisticated investors, we understand those investors who are full aware of the risk they are investing in, mm-hmm. and also who have the capabilities to take the risk. So the time involved, the risk of loss, And also even they have the capabilities to assess the investment they are doing. So this is different from those one who is out there who has only the option, for example, to save. Someone who wants just to save or to invest in low risk securities. So they are different. So in this case, those who will need to get exempted, the exemption will be requested considering those this component of the investors involved, the investment objective and also the investment policy of the CIS.
Thank you so much. Thank you so much, Noella. Now, before I continue with the questions, just a reminder to our viewers that our chat box is open. So please feel free to send in your questions, share your insights or comments. We'll incorporate them in the discussion as we go. One final question for you, Noella. You've talked about the requirements of obtaining a license. Can you please share a bit more about what that process is like and what those requirements are from the regulator's perspective?
Yeah, okay. First of all, the CIS need to be set up by someone who is licensed, who has the investment management license. So the entry point is that the person who wants to operate a CIS should get, first of all, the license, the appropriate license of investment management. So those ones will be responsible for the management of the CIS and also put in place other arrangements that goes with the appointment of custodian, other service providers. So the first thing, and we can even take the example of the ARNet. The ARNet was set up just before setting up the Iterambere Fund. So they need, first of all, to get the license, the appropriate license. Once they get that license, so we have the licensing requirements which are available even on our website, and anyone can access them. Once they get the license, that's when they can set up a CIS. So the CIS, they need to decide on the legal form that it will take. This is a business decision that we cannot interfere with. So once they have set up, they have put in place all the needed information, they lodge the application with CMA. So that means they lodge with the CMA the application that has the formation documents and other information that we may need. For example, we need to know the business itself, what the CIS will be dealing with, the investment policy, the objectives, the exit arrangement or the entry arrangement available. Is it open to the public or is it just a targeted offer to some sophisticated investors? All those information need to be available to the CMA from the application point. And that's where we may even determine whether it needs an exemption, because the exemptions are listed in the law, so we can assess and establish if really they can be granted a license or not. Yeah.
Thank you so much, Noella, for shedding light on that. Jonathan, as somebody that works for an investment company but also manages a collective investment scheme, can you explain a bit the organizational structure? Who are all the service providers that are needed to set up a proper collective investment scheme? So there's the investment management company, for example, there's the CIS. Are there other players that are needed? Sure. And on top of that, what then becomes the governance and management roles of the different players?
All right. Thank you. As my colleague Noella mentioned, first of all, we had to come up with the Rwanda National Investment Trust as an investment management company. And they got license by then from the central bank to do the fund management. Then after that, of course, we came up with the unit trust, the first unit trust, and we had to come up with trusted deed. And here, we need to have a board of trustees. The board of trustees are the people who actually stand in for the unit holders to see what the management is doing in terms of where they invest, how they do the investment, how the unit holders' rights are kept. I mean, the management has to report to board of trustees on day-to-day management of what they do on behalf of the unit holders. Then we have custodian. She mentioned custodian. Custodian, this is a person who keeps the scheme's assets in custody. For the case of Untitled Fund, it is the central bank who is the custodian of Untitled Fund. Then we have external auditors. We need to have independent external auditors who do audit on an annual basis. Then we have the General Assembly. The General Assembly is we usually have annual general meeting for all unit holders. So all these are the people who we report to as management. Now, as management, of course, which is a government institution, we also report to the Ministry of Finance. And the Ministry of Finance has got the board of directors for the company. So all these are the different, should I say, how we are being managed. The company has got the board of directors appointed by the cabinet, but also the fund has got board of trustees who are on day-to-day see how the business is being run. And then these other external auditors, legal, we have some legal experts, external legal experts who are supporting us currently because the company may not have all the skills that are required. That's why we outsource some of these skills. Then apart from that, the government itself, we have got the Auditor General, Auditor General for government finances. So the Auditor General comes to audit the company because the government has a budget usually on an annual basis they put in the company. So all these are the different stakeholders who really see how we do the business on day-to-day.
Okay, great.
Yes. Yeah.
Great to know. So the different service providers, you've mentioned you have a custodian, you've mentioned you have auditors. Are these also regulated service providers?
Of course, because they have got, these external auditors have got their body. So you can't deal with someone who is not known. But also, as a company, the government Auditor General is of course, others people we deal with who are service providers, they all have the bodies which they are under. So you can't do with, we can't deal with people who are not regulated.
Yeah. That's great. That's
and
great.
Of course, I was forgetting to mention that CMA is my regulator. So, I report to her on a monthly basis. So,
so you have your boss on the panel.
Yes, of course.
Okay. So basically, RNIT, Rwanda National Investment Trust, is regulated by CMA.
CMA.
And then the Iterambere Fund is also regulated
by Central Bank.
By CMA.
Central Bank for the fund management. We are a fund managers company. So on that side, we are regulated by the Central Bank. They are the one who license us as fund manager. But for the management of unit, this CIS, we report also to CMA. Okay. So in that case, that's why we're saying that maybe going forward, we should be having one regulator. But that's something we shall be discussing later on. Yeah.
But just to make it a bit more clear for our viewers here, Noela, he mentioned that he's regulated by CMA, but he's also regulated as a fund manager by the central bank. What's the distinction there?
Maybe, sorry, before she comes in, I need to make it clear here that we are licensed not only to manage the fund, a Terambere fund, we are also allowed to manage different schemes in terms of like a private pension funds. So that's why the central bank comes
As
in.
the private pension. Okay.
Yes.
That makes sense.
Yeah, I think he had made the point where the nuances are. So the central bank is responsible for pensions. So we have come to an agreement, and we have some cooperation with the central bank over this, whereby we might have a service provider who may need license from both. It's not only R-Night which has the both, because once you are an investment manager, you can do both. You can manage collective investment schemes or even pension. Only the difference is the direction that you can give to those portfolio. So that's why they require to have another license if they want to manage the pension scheme. So from our side, they manage, we have given them the license for investment management for the CIS and other types of portfolio, because you can even approach them if, as an investor, you need your money to be invested, and you do not really want to go through the Terambere fund. It is possible. That's how investment managers work. They do not only have the capabilities to set up CIS, they can also manage other private portfolio from investors. Yeah.
That's great. Thank you so much for helping make that clarification. Our final question here, before we open up the floor to our viewers and their questions, goes to Dieudonné. Jonathan and Noella have shared a bit about the process of setting up a CIS, the requirements of setting up a CIS. So for example, I think they've mentioned something about a prospectus. So what is a prospectus of a collective investment scheme, and why are the statements of a collective investment scheme, why do they need to be as accurate?
Okay, thank you very much, Liz, for that question. So basically, to explain a prospectus, one needs to relate to what Adelaide mentioned, that some of the CIS may raise funds from the public. So with that idea of CIS being able to raise funds from the public, so that means that they need to make an offer to the public for them to acquire or to subscribe to units or participatory interest in those CIS. So now, a prospectus then, in that context, is a type of disclosure document that is issued by a CIS to the public, setting out the terms of the offer, that's one. Two, but also disclosing all material or relevant information about the CIS in terms of which type of investment they are considering to invest in terms of what are the responsibilities of various actors within that specific CIS, including the operator or fund manager. All those type of information an investor would need to know for them to make an informed decision as far as investing or buying a unity or a participatory interest or a share in a CIS is concerned. So that's what a prospectus is. So now, regarding the relevance of the accuracy of the information in a prospectus, here is two things. So normally it is said that securities law are mainly about two things: information and regulation against abuse by market players. So that means that information is quite critical when it comes to securities, law. I mean, because that's why you would see that the election of Trump in the U.S. is causing like the clash of the prices of some of the stock which were well performing. So in this specific case, if the information in the prospectus is not accurate, so that means that the investors will be misled. So they will be making wrong decisions. For instance, if you're saying that you're going to be investing in fixed income securities, yet for some reasons you're also going to be investing in equity securities or even these structured securities like derivatives and others. So those are the things that investors need to be able to appreciate before deciding whether it is worth investing in your fund. So that's why it's quite critical that whatever being disclosed in the prospectus is accurate as it should be. Thank you.
Thank you so much. Thank you so much, Dieudonné. I think that brings it to the end of the questions that we had. We're now going to open the floor to questions from our viewers. Again, viewers, if you have any lingering questions, now is the time to ask them. Viewers, please bear with us as we set up the Q&A chat box correctly. But if you need any legal services, Dieudonné is available to help you set up a collective investment scheme. Jonathan from Arnite is available to really act as the role of investment management company to help run your collective investment schemes. So you have resources here on the panel. So we have a first comment from Jean-Claude Shimimana. He says, wow, I like what I hear from the panelists. Thanks, Adélie, for the historical background of KFC. This panelist, Dieudonné, is really best at taxation aspects of collective investment schemes. I have been enlightened. Cheers. So Dieudonné, kudos to you. Again, the firm of Dieudonné, ENS Africa, is here to help you, to accompany you on your journey of setting up a collective investment scheme. Okay. The next question and comment is from Ernest Wizimana. Ernest Wizimana says, thanks for setting up this webinar on collective investment scheme. My concern is that all those schemes are not well advertised. Why not going down there and make mass communication as RRA? And this one, I'll open it to all the panelists to take a stab at it. I'll start with Adélie, and hope to hear from Noella as well, and anybody else feel free to chip in. So basically, Ernest is saying that we need more communication about the different options that are available in the new collective investment schemes law. So how are we planning to go about doing mass communications about these collective investment scheme options?
Yeah, thank you, Liz. For the question of Ernest Bizimana, so this is a start. So to go out for awareness of the public or users of the law, we should first wait the law to be published in the government of Rwanda official gazette. This has been done in November. So now is the start. So after this webinar, so we are planning to reach out to different clusters, private sector, federation, users. So this is a start.
Great. So Ernest, as Adelit is saying, this is only the beginning, and the work is to continue. I don't know if the other panelists would like to add something in terms of really communicating the options that are available in this new law and how you're each hoping to go about it, because all of the panelists that are currently on stand have some sort of role to play as in regards to collective investment schemes.
Maybe the concern of his man is genuine, and but I must tell him that always the starting is always not easy. But so far now we have something to go about. You say start always is not easy. That's why they have not seen us down there to be able to reach, to do the mass outreach. But as Adelit said, we have now a product that we see it can work now. That's why we are going to make more efforts to go out, to use different channels of communication so that at least the public is aware of what is going on, not only at the KIFC, but also other market participants, what we are doing. We'll be getting out there.
Thank you so much.
Yeah.
Thank you so much, Jonathan. Now, we have another question. I mean, Ernest still added a little bit of information to his question, saying that the financial literacy in Rwanda is still low, and that RRA does mass communication. So maybe something to learn from Rwanda Revenue Authority. Thank you for that comment, Ernest, and for sharing your insight. We have another question from Dieudonné. Dieudonné asks, I need to mobilize many people to finance farming at large scale. Is it possible to invite investors in my project, or should I be licensed by Capital Markets Authority? And I'm going to direct that one to Noela to first take a stab at it.
Well, thank you. I think, first of all, for any call to invest or any offer soliciting investors to invest publicly or even on especially on large scale, which in this case it means the public. You need to get the appropriate license. This is only allowed to those who have the appropriate license. Currently, we allow stockbrokers and others, service providers, investment advisors, and sponsoring brokers to take the lead in this. Investment managers can also do this when they call for, or they call or they offering for a collective investment scheme. So in this case, it is like, so we need to know what type of arrangement he's talking about. If it is a collective investment scheme, of course, for any call for investment, it has to get the appropriate license. So if it is like a company that wants to get more capital in investing in farming, it is different from a collective investment scheme that want to invest in farming. So those are different aspects of how we can go about it. So I don't know if I got it. I got it well. But if he thinks about a collective investment scheme, well, that will need definitely will need the investment management license for it, and because of that, the aspect of it's a regulated activity, and also, of course, they offer documents for those investors who will be likely or who will be interested in that type of investment. So the collective investment scheme today is open. In the previous law, it was a bit narrowed only to public offers that goes into securities, but now it has opened up to collective. Once you have to pool funds, then you have obligations toward those who have put their money into the investment. And that goes with getting the appropriate license and even publishing the appropriate offer document, which is in this case the prospectus. Yeah, thank you.
Great. Thank you so much, Noela. Dieudonné, I believe that answers your question. And if it doesn't, please feel free to reach out to either Capital Markets Authority or Rwanda Finance, and we will help you, we'll facilitate this for you. But as Noela was saying, there's different dynamics at play. She doesn't know if it's a private company that you're looking to raise funds for, or if you want to set up a collective investment scheme. And if it's a collective investment scheme, then you need to work with regulated service providers to help you set up that collective investment scheme, or you yourself set up an entity that would be regulated by Capital Markets Authority. So thank you so much, Dieudonné. Our next question is from Shimiimana Eli. Shimiimana Eli says, many thanks for the webinar, #KIFC. It's quite informative and this should be recurring. I don't know if I missed something, but what is the tax treatment of CIS, opaque or transparent? Thank you so much, Eli, for joining us for this conversation. We touched a bit on the tax treatment, the tax nature of collective investment schemes, but I will direct this question to Dieudonné. Eli asks, is the CIS structures, are they opaque? Are they tax transparent? What is the tax treatment? If you could do a small recap for Eli.
Thank you very much, Eli, for the question. So, whether a CIS may be treated as an opaque entity or transparent entity for tax purposes will depend on its structure. So, where a CIS is structured as a company, that definitely means that it's an opaque entity, meaning that there will be taxation at the level of the company and also taxation at the level of the investors. Of course, with the exemptions we discussed, because when a CIS distributes dividends, for instance, to its investors, then there is no withholding tax on dividend that is there. But at least theoretically, so a CIS that is structured as a company, it is an opaque entity. Same for partnership, but for now, but as we mentioned in the future, so we are having the law amending the income tax law in Parliament, and that one is making it clear that partnerships are going to be tax transparent, and that means that CIS structured as such are going to be transparent. So, and that aspect of tax transparency also should be applicable to these other CISs which do not have legal personality and which are based, on either the trust deed or the agreement between the operator and the depository. So those also should also be having a tax transparency treatment. Thank you.
Thank you so much, Dieudonné. I hope that answers your question, Eli. From what Dieudonné is saying, their CIS are tax transparent entities, except if you use the option of an investment company. Our next question is from Lilia. I don't want to read your last name, I would butcher it, but it's Alaoua. I hope that I read that correctly. Lilia asks, isn't it possible to invest in farming through a collective investment scheme? I'll direct this question to Adelit.
Yeah, thank you, Liz, for the question of Lilia. The answer is yes. So as we said, so the law we have the CIS, which will not be raising money from the public. So those CIS can invest in other type of asset, which are not necessarily, for instance, securities. So we said, an example, the private equity. So if we have, for instance, company which is multiplying seeds, so the CIS, for instance, can buy stake in that company. So if the law we have, the answer is yes.
Okay. Lilia, you've heard it from Adelaide. So there's no restriction to what a collective investment scheme can invest in, so it can as well invest in farming. Our next question is from Robert Twadira. He says, thank you for the panel. My query goes to Arnite. The query is, don't you think it is high time you invest in equities market as well, since most of the listed companies at Rwanda Stock Exchange are 100% profitable? That is obviously
right.
to you, Jonathan.
Thank you, Robert. Actually, the offer document or the prospectus that we have for Iterambere Fund, it does allow to invest in equities up to 30%. But it gives the management the power to choose when and how to invest there. But again, the prospectus allows us we can invest even up to 100% in fixed income. So there are options that we look. Now, it is up to the fund manager to look at how the right time to invest in the other option like equity. So having not have, currently we have almost everything in fixed income. It is even within our how we observe the market, how we see the right time to go there. And so I'm sure going forward, we'll be going even in other asset, as I mentioned. So the prospectus or the offer document which the unit holders have reviewed and they accepted to bring their money, it does allow up to 30%. But as we speak, we have been limiting ourselves not to go there because, as I mentioned, this is the first unit trust. Starting was not easy, and then we want to make sure that people really have confidence. You know, somebody said the literacy, financial literacy is still low, and we need to look at that. And the people who are saving are low-income people who need to be not only just showing them the return is good, but also you need to educate them. And so it is a way of the way we do it. We do both fund management, but also we do educate the people. So that's why we always do the balance and see how or when should we go into other assets. So we'll be going there, Robert. Don't worry. Thanks a lot.
Thank you so much for your question, Robert. As Jonathan has shared, it's something equity investments are, equity securities are on the radar of Arnite, so it's something to look forward to. But also to the question that was asked earlier on really literacy when it comes to to the investment landscape, to investments in Rwanda. That's also something that Arnite is working on in terms of educating the Rwandan citizens, the Rwandan population, and making sure that they have a high level of financial literacy. So thank you so much for your question, Robert. All right. It looks like we've covered all our questions today. So this brings us to the end of our webinar. Thank you so much to the wonderful panelists for your engaging and dynamic conversations. Thank you for the viewers who have joined us and asked questions and shared their comments and insights. We hope you walk away from this webinar better informed about the collective investment scheme law and its options and really its ins and outs. And really, if you have any other questions that are still lingering, feel free to reach out to Rwanda Finance at info@rfl.rw. That's info@rfl.rw. You can as well reach out to the regulator themselves on the CMA website. Same thing with RNIT, Rwanda National Investment Trust, and ENS Africa as well. So feel free to reach out to any of us directly. We'd be more than happy to take further questions, to offer further guidance in relevance to the discussions that we've had today. So thank you again for joining us, and we'll see you next time.
As a platform for financial innovation and financial investment, a number of noticeable players already, and is continuing to do so.
The Kigali International Financial Center is coming within a context of rapid economic growth in Rwanda. Today, if you want to do business across the continent, we offer you Rwanda as a hub. You come here, you set up your business here, and then you can expand to the rest of the African continent.
In terms of untapped opportunities in Africa, we have access to expand. Yeah, we have a very large untapped market, can be catalyzed by technology today. Africa has the highest mobile penetration. That is in itself a really good opportunity to transmit those financial services.
We are in the middle of the digital transformation. We have new ways how to interact with finance, with our fingertips on our smartphones. In the financial industry, we call it fintech, financial transformation. This kind of trends, we have a big impact in the future.
Fintech is a key component of what we want to do in Rwanda, and that will have positive externalities for Rwanda, but also for Africa.